Let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to give the spike trade calls. And today for the event, US GDP data release. The GDP data is expected to be released by 12:30 GMT. We are by 11:30 GMT. We are 1 hour ahead of that. And here you come across the live market. This is a live market code page wherein you come across the majors and the commodity pairs are being listed with the live levels of their trade. Then you come across the net change from that of the previous day close is shown here, and today's high and the low are also shown here. Now I'll be giving it in two parts, this spike trade calls. One is the pre-GDP data release. That will be between 11:30 and 12 GMT, a pre-GDP release, and I will also give the trade calls now. Then afterwards, 13 to 13:15 GMT for about 15 minutes. After that of the data release, so data release is by 12:30 GMT, and 13 to 13:15 GMT, I will review the result, what I have obtained from that of the trade call, and also I will explain to you what is the trading strategy used in order to earn consistently money from that other market. So this is what ultimately more important thing for a trader. See, a trader can go in-depth study with regard to the US GDP, how exactly the GDP, gross domestic product, produce is being considered, and you can go into the details of all the parameters which are given here. So here you find the gross domestic product price index and the product annualized and the consumer price expectation price and core personal consumption expectations, etc. all are being given, and ultimately what is going to be the expectation of a trader is nothing but whether euro is going to come down or go up. So ultimately GBP is going to come down or go up. So what sort of trade one can do based on that particular event. So, and this is the prime objective of a trader. So a trader look for the clue from that of the fundamental data release. So the expectations out of the fundamental data release is it might be positive or negative. So that is why you come across the expectations and the previous, and also you find the actual. The actual is going to be released by 12:30 GMT. And in that process, what is going to happen? Now, you know that I give the market forecast on every Monday for the entire week based on my algorithm. And from there, I just posted here. Today for the weekend, Friday, they are expected to make the dip and rise move during the Japanese session is over. Now we are in the European session from 8 to 13 GMT. And swing and firm up move is expected during that of the, it's again changed. Swing and firm up move is expected during that of the European session. Currently we are in the European session. It is 11:30 GMT, and up to 13 GMT is the European session. So it is actually the release of the data by 12:30 GMT, 30 minutes prior to the close of the European session. And later on the US session starts. And these are all the timings followed by the other players. So ultimately we need to understand it is not the what others refer to. My time frames are totally different because these are all the time frames used by the other players. So the players, what time frame they are using is more important rather than whatever the time frame we try to conventionally use it, and it may appear that we are doing it the right way, but actually the players do it in a different way. So if you read their intentions, then we will be able to read their tricks and then trade accordingly. So US session starts by 13:30 GMT. So 12:30 GMT, the US GDP data is expected to be released, and it is in line with that of the expectations. So you may not come across much of a dip, but what they are expected to do, and during that of the data release time, about 5 minutes before, around 12:25 GMT, they are expected to make a small dip before 12:30 GMT, and then swing and spike up during that of the post data release time frame. So this is what the forecast says. Now we'll go to that of the market reading by using the initial lows and the highs, what they are set around 3:30 GMT during the start of the Japanese session. So here I noted down the initial lows and the highs. So what we do is we take into consideration the forecast, then fine tune the forecast using that of the market reading technique, and then we use the trading strategy to limit the risk and maximize the profit, and try to follow the fine tuned market reading and enter into the market and limit the risk and nullify the risk by keeping stop at entry, and then subsequently we try to trail the stop in a profit making position and also trail the exit order or the take profit order, thereby we maximize the profit. Now I noted down the initial lows and the highs set around 3:30 GMT, and that I explained during that of the Asian Session Live Market Analysis webinar I gave this morning. And here you find that 1.1187 was the initial low. They came down from there about 17 pips to 1.1170, and they are holding around that. And so before that of the data release, they are making a small dip in the case of euro. And in the case of GBP, 1.4660 is the initial low, 64682 is the initial high. But here it is wrongly mentioned. And actually, that 4660, they just breached it and came down to 4659. And so after that of 4637, they are expected to go up, and they came down up to that of 4637. Actually, this is showing wrongly here in the spot page, and this is yesterday's level. And in the case of yen, 109.56 is the low, 110.00 is the high. They are not breached the low or the high. They are holding it closer to that of low. And if you see the net change, euro, GBP as well as USD yen showing negative net change, that is a contrarian move on the downside, and they intend to make upward move in all the three currencies after that of the GDP data release. And that is why they are making a false move before that of the data release. So we should try to pick up the buy position near that of the low. Then we are expected to see an upward spike after that of the data release. I do not know about the GDP or what is going to be the outcome, but I can tell you based on their intentions that they wanted to spike up euro and GBP, also USD yen after that of the data release. So ultimately that is more important for us. And if the players are pushing it down quickly and holding low, and always keep in mind they've got a purpose. They just test the patience of the traders by holding low, and then subsequently use the data release as a trigger, whether it is positive or negative. They give different type of interpretations and then try to make an unexpected move to that of the traders, so that the traders get caught vulnerably. So here in the case of euro, they are holding below that of the initial low. In the case of GBP also, they are holding it below that of the initial low. And in the case of yen, they are not breached the low or the high. And in the case of CHF, and they just they are not breached the low, but they breached the high and went up to 99.10. So the spread is very narrow. It shows that they are going to simply make a consolidation. And in the case of Canadian dollar, 29.69 is the low and 29.91 was the initial high. They just breached the high and staying above. So they are likely to make a contrarian move of just gain some more in the case of USD CAD. And then in line with that of the other majors showing the USD weakening move, they are expected to make the USD weakening move in the case of Canadian dollar also. So USD CAD is expected to come down. And Australian dollar now it is showing negative net change and it is expected to go up. So the initial low was 0.7219 and they came down to 7208, then holding around 7211. So when you see that these levels, Euro, GBP as well as Australian dollar, when they are holding below that of the initial low, then it might give the impression for us that it could come down further. But actually, they formed the new low, and those new lows, they are not breached. That they formed during the other gap time before the start of the European session, and they are simply holding closer to the other low, indicating that they will revisit the low closer to the low as a false move before the data release, and then start gaining the levels after that of the data release. So the trade call, what I intend to give is, in the case of Euro, we can try to take a buy around now 1168. They just made a small cut of the low what they have set, and so this is how they just make the dip in the market before that of the data release. So you can just fine tune and try to take a buy closer to that. So 1.1168 we can take a buy, and 1255 we can take an exit because they are expected to make an upward spike, and 1.1130 we can keep the hedge order to limit the risk. So when they are holding closer to the low and not breached for so many hours from the start of the European session, it shows clearly that they are accumulating the buy position near the low after a brief downward stop, and they are expected to spike up. So I do not know the outcome of GDP, but the GDP data release will be used as a trigger to make an upward move in the case of Euro and GBP as well as USD-Yen, because they will continue to show the contrarian move on the upside. Now they are doing the contrarian move on the downside. So when Euro and GBP are showing negative net change, that means they are showing USD gaining move. But in the case of Yen, they are showing negative net change. That means it is USD weakening move. And when the currency show USD gaining and the USD weakening move, which is referred as a contrarian move. So you can try to take a buy here. And similarly, in the case of GBP also, another small dip, we can take a buy. Australian dollar also another 5-10 pips drop, we can take a buy. And in the case of Yen, they are just holding around 67, 69. We'll try to take it around 60, 62. And then keep 109 as the hedge order to limit the risk. And they are expected to make an upward spike to 110 and above, and briefly go above 111 and hit the stops of the short sellers. So these are all the expectations. These are all the trade calls I have given for this. And if you've got any question, you can ask me, and I'll come back by 13 GMT and try to review the calls, what I have given it, whether the calls were really good or they are not good, whether the market has gone against. In that event, when they are hedged, how exactly I handle the hedge, and also try to earn money from the other market, irrespective of the market move, whether it is making an upward move or a downward move. So what is more important for a trader is he is taking positions and try to earn money from that other market for his livelihood. Whether US GDP is going to be very, very positive or nominally positive or as expected, he is not going to earn his spread. He is going to get the money only by his smart way of trading. And when he is able to do a smart trade, he is able to earn money out of his effort of understanding the market, and then subsequently you will be able to show more interest in trading. So ultimately, what is more important is money making for that of the trade. There is a question. I sent you a contact request for Skype for the past 2 weeks and I have not accepted. I have not received, probably I think you have sent it to the wrong ID. My Skype ID is iknowindices@hotmail.com. Kindly check it. And could you please take a look at Canadian dollar N? See, I normally give the forecast in the FX trade for the four majors and two commodity pairs and not on the other crosses. Because small trader, when they try to take their trades in small crosses and where the volume is relatively less, and if they are struck, then it will be very vulnerable for them to lose the account if they trade without a stop, because many of the traders think that the majors are going to be influenced by the data release, the crosses are not going to be influenced, and then they try to take the position in the crosses and expect the crosses to show profit, and they follow the technicals and take the position. Later on it goes and they ask everybody to see, have a look at this cross, can you tell me what is going to happen, etc. So because I do not want the small traders to suffer, and I want them to take position only in the case of Euro and GBP, so that if you hold a position, they will make the swing. In that process, you will be able to close it with a profit. But in the case of crosses, they just do one-sided move, and you will find it extremely difficult to hold the position for a long time, and invariably when there is a margin call fear, then you cut the position. I do not want such extreme stressful conditions for the small traders, and so I discourage giving the forecast in the open forum for the traders to trade in small crosses. Kindly excuse me. Then could Euro gain to 1.1350 area? Today it may not be able to gain, and it could be able to gain to that of 1.12 and 1.1270 area, and if the going is good, probably they could gain more if the short covering comes. See, ultimately keep in mind that the players make the rise and the drop depending upon the pending positions of the traders. So they make a quick drop, and then the traders think that the market is going to drop big, and then they take the sell position, and afterwards the players quickly gain the level and the short sellers come for the short covering. In the event of all the traders taking buy position when Euro is holding at a lower level, GBP is holding at the lower level, all have taken the buy position. The players are not having any charismatic feel of gaining the level and giving the profit to that of the small traders and others. So ultimately what they will do, they will make one shaking of allow the market to have a free fall, and immediately those who have taken the long will liquidate all the long positions, and later on they will gain the levels. So ultimately what is more important is it is not the forecast, or it is not the fine-tuning of the forecast, whatever it is, and the most important thing is the trading strategy. In the trading strategy, I'll be giving it on 8th of June, and at that time I'll explain to you how to read the intentions of the players based on the type of moves they are doing it in the market. And now, as I told you, and I have been giving this Tracking the Forex Market Together webinar in FX Trade for a very long time, and those who are able to follow those webinars will be able to understand how to track the intentions of the players. So it is like any businessman. A businessman who is sitting in the shop, and he will be able to find out a person who is entering the shop whether he has come for the window shopping or whether he is genuinely interested in buying a product. And so he senses the feel of the buyer, and accordingly shows all the things what he is showing interest. So in the same way, reading the intention of the client is very important if you want to become a successful businessman. Similarly, in the forex market, you need to read the intentions of the players if you want to become a successful trader. Is there any other question so that I can answer to those questions? So these are all the calls I recommend. So Euro current market level, you can take a buy, and GBP also slightly lower, you can take a buy. And Australian dollars about 10-12 pips lower, we can take a buy, or current market also. Accordingly, you can keep the hedge order to limit the risk. And what the trading strategy I do is I keep the hedge orders, and if the hedge is not filled when the positions are taken, these are all the buy position because they are doing the contrarian move. Both the numerator as well as the denominator currencies, they are expected to make the gains. And once they gain the level, I'll keep stop at entry, gain about 20-25 pips, keep stop at entry in the buy positions, and remove the hedge order so that the hedge order is used instead of stop. Then subsequently, when the market moves in my favor, I'll try to adjust the exit level accordingly so that the market can either hit my trailing stop or the take profit order. Thereby, I'll be able to maximize the profit. So that way, we should see that we are assured of the profit once the positions start showing the profit. Because many of the traders, what they do is they take the buy, and when the market shows 100 pips upward spike, they just laugh and say that I got a fantastic entry in the market which is showing 100 pips profit. So I'm going to hold it for 2-3 days and see what best I can do. In another 30 minutes, the market will make a drop and you lose all the charm what he has gained, and see that the position is negative condition. Then he asks various people what is going to happen to that of the market. So don't do that. Instead, as a trader, once the position makes profit, keep stop at entry so that if it is stopped out, you will have a better buy level. At the lower level, you can buy again and trade. So market continues to give trading opportunities. Keep that in mind and then trade accordingly. There is another question. Is USDN buying not contradicting the strategy since the whole pair is dollar negative? See, as I told you that USDN is, we have to buy because they are showing a contrarian move of showing negative net change in the case of Euro, and GBP also negative net change in the case of USDN. So that shows that they are making a contrarian move on the downside. Contrarian move is that Euro and GBP are showing the USD gaining move, USDN is showing the USD weakening move. And this sort of contrarian move, they do it in order to handle the yen crosses in a big way. And that is why you come across one-sided drop and one-sided gain in the case of yen crosses. And that is what I was telling you, that if you are trading in the case of crosses and if you are on the wrong side, then you might be losing the shirt if you do not understand how they make moves in the market. So always keep in mind that the players create the market sentiment and act against that of the traders. And if you go with that of the market sentiment and try to trade, you will be chasing it, and you may earn in 50% of the trade, lose in 50% of the trade, and you will be staying where you have started even after several years. And there is of no use when you do that sort of trades. Kindly reflect on yourself and kindly understand what you have done as a trader. Have you really done the trading, or you have become an egoistic person, saying that what I perceived should happen in the market when it is not happening, and simply say the market is crazy. By shouting at the market is crazy, you don't earn money, and you are only shouting in front of the computer, and which will not be able to understand your expressions. So always keep in mind that the players are here to play the trick and earn money from that of the traders, using all the data release as the trigger times. So trade accordingly. That's what I can tell you. So if there are no more questions, so I will come back by 13 GMT and take about 15 minutes to explain the results out of the calls what I have given, and also review what happened to that of the market moves during and after that of the GDP release. Now we see that they just breach the low. GBP, they just come closer to that of the low. And USDN also, they will make a small push on the downside and hit the stops and then start gaining the levels. So that we need to understand. And in the case of USD CHF, they are not breached the low or the high, and also in the case of Canadian dollar, they might make a brief upward stop and then come down. In the case of Australian dollar, a small push on the downside and start gaining the level. Okay, see you by 30 GMT. Hope you are able to understand the trade calls, what I have given it, and please come back by 13 GMT and we will review the market and find how exactly the market should be understood. Thank you and all. See you again.